Good afternoon, all of you. We are in working capital management. Previous session, we have discussed about investment decision. Am I right? In investment decision, we have come across project evaluation techniques. That is simple payback, payback reciprocal, ARR, discounted payback, net present value, profitability index, and MIRR. In today's discussion, we are going to discuss about working capital. What is called working capital? What minus what is equal to working capital? What minus what is equal to working capital?
Current assets minus current
Current asset minus current liability. Okay, good, Kana. Current asset minus current liability is equal to working capital. Excess of current asset over current liability known as working capital. Based on working capital, that is the current asset to current liability, we used to compute one ratio. Any guess which ratio we used to compute?
ratios.
Based on current asset and current liability, we used to compute current ratio. What is the formula for the current ratio? Current asset divided by current liability is equal to current ratio. Any idea about prudent current ratio? Is the accepted current ratio, prudent current ratio? Text பண்ணலாம் தப்பு இல்லை. What is the prudent current ratio, my dears? Any idea? The prudent current ratio is 2:1. எவ்வளோப்பா? 2:1. ரெண்டு current asset இருந்தா ஒரு current liability. One time liability, two time asset. It's an accepted or prudent current ratio. Clear? Now we are in working capital. Current asset minus current liability is equal to working capital. Excess of current asset over current liability is called working capital. With respect to working capital, what is called current asset? What do you mean by current asset? Current asset represent assets which are readily convertible into cash within a short duration. Assets which are readily convertible into cash within a short duration are known as current asset. Current example for the current asset: debtor, cash in hand, cash at bank, then short-term investment, prepaid expenses. Everything is called one. Bills receivable. Yes, bills receivable. Okay, these are all called current assets. Current liability. What do you mean by current liability? Obligation for the payment arises. Obligation for the repayment arises within a short duration are known as current liability. Like sundry creditors, bills payable, then outstanding payments, bank overdraft. This and all comes under current liability. Then you should know classification of working capital. Working capital can be broadly classified into two types. One is based on concept, another one is based on time. Concept based classification and time based classification. Based on concept, it can be classified into gross working capital and net working capital. Based on time, it can be classified into permanent working capital and temporary working capital. What do you mean by gross working capital? Gross working capital represents current asset alone is represent gross working capital. Net working capital called current asset minus current liability is called net working capital. Then based on time, it can be classified into two types. One is permanent working capital, another one is temporary working capital. What do you mean by permanent working capital? Minimum amount of working capital required at any given point of time. Minimum amount of working capital required at any given point of time is called permanent working capital. It's also called fixed working capital or hardcore working capital. Fixed or hardcore working capital. Then, second one is what called temporary working capital. What do you mean by temporary working capital? Over and above the permanent working capital are known as temporary working capital. Are you with me? Clear? Over and above the permanent working capital are known as temporary working capital. This is what working capital classification. Temporary working capital, also known as variable working capital or fluctuating working capital. Variable or fluctuating working capital. These are all classification of working capital. Now, the next segment is called working capital cycle. Working capital cycle represents time duration required to get back the amount invested. Clear? Conversion of cash into cash equivalent, thereafter back into cash. Clear? Time duration for converting cash into cash equivalent, thereafter back into cash is called working capital cycle. It's also called cash cycle. Working capital cycle is also called cash cycle or operating cycle or business cycle. Clear? There are alternate name for working capital cycle. Then cash, we are having cash. There are two objects of financial management. One is procurement of fund, another one is effective utilization of fund. The great difficulty are going to procure the fund. The procured fund is called cash. What I have to do with the cash? Cash I am converting into raw material. I am purchasing raw material. Raw material I am going to convert into WAP, work in progress. Work in progress is going to become fully finished goods. Then that goods I am going to sell to the debtor, so that if I am going to sell, you get the debtor. From debtor, I am going to collect the cash. What I have to do with the cash? Again, I am purchasing raw material, WAP, finished goods, debtor, again cash. It's one cycle. That's why it's called operating cycle or working capital cycle or cash cycle. Clear? So time duration required for which conversion of cash into cash equivalent, thereafter back into cash are known as operating or working capital cycle. Ashwin புரியுதா? ஹரிஷ் லனின் புரியுதா கண்ணா? மோகன் ராஜ் புரிஞ்சுதா? அபினவ்,
Sir.
பிந்து, ஜோதிகா, good. ரகுமான் எல்லாருக்கும் புரிஞ்சுதா? Okay. Now, with respect to working capital cycle, one question we can do: how to compute operating or working capital cycle? Question chat boxல இருக்கு பாருங்க. Jyotika, kindly read the question.
Yes. Calculate cash cycle and number of cash cycles in a year, assuming a 360-day year with help of the following information: stock holding raw material 45 days, WIP 30 days, finished goods 1 month, average collection period from debtors 70 days, time lag in payment of 60 days.
Good. Note it down. Statement of computation of operating cycle. Statement of computation of operating cycle. operating cycle is equal to formula. Operating cycle is equal to raw material plus WIP plus finished goods plus debtor minus creditor. Raw material plus WIP plus finished goods plus debtor minus creditor. How much the raw material is there in this question?
45 days, sir.
Yeah. You note it down. Operating cycle we have to express in percent. We have to express in terms of days or months. Operating cycle we have to express in days or months. So raw material, how many days? Raw material, how many days, my dears?
45 days, sir.
Yes, 45 days. WIP, raw material 45 days
30
plus 30 days WIP
30 days.
plus finished goods 1 month is equal to 30 days plus debtor 70 days minus creditor 60 days. Therefore, operating cycle is equal to Lenin, answer pump. Reddy Garu.
115 days, sir.
115 days.
115.
Operating cycle is equal to 115 days. Good. Ema bindu vandadakana. Next, number of operating cycle in a year is equal to good. Number of operating cycle in a year is equal to number of cash cycle or operating cycle or not same. Number of operating cycle in a year is equal to 360 divided by number of 360 divided by operating cycle. Yes, Lalita, good. 360 divided by operating cycle. Original formula 365, but in this question 360 am I right? Year consists of 365 you have to take, but in this question specific information is that 360 divided by operating cycle. So 360 divided by 115 is equal to number of operating cycle. Comes to 3.13 times. Good cut 3.13 times. All of you got 3.13 times. Good. Yeah. Times you have to either times or cycle you can write. Got it?
Yes, sir.
Next. Next, note it down. Opening balance. Opening balance raw material 45,000, WIP 35,000, finished goods 60,181, 60181. Question is there in the chat box. Debtors 1,12,123, creditors 50,079. Closing items. Raw material 65,356, WIP 51,300, finished goods closing 70,175, debtors 1,35,000, and creditors 70,469. 70,469. Got it, my dears? Then annual purchase of raw material at 90% credit, annual purchase of raw material at 90% credit is equal to 4 lakhs. Is equal to 4 lakhs. Annual cost of production. Annual cost of production 7,50,000. Annual cost of production 7,50,000. Annual cost of goods sold. Annual cost of goods sold 9,15,000. 915. Then annual operating cost. Annual operating cost 9,50,000. Previous one 9,15,000. Now 9,50,000. Then depreciation element. $20,000. Depreciation element 20,000. Annual sales. Annual sales at 80% credit. Annual sales at 80% credit 11 lakhs. 11 lakh. Requirement. First one, compute net operating cycle. First, compute net operating cycle period. Net operating cycle period. Next, number of operating cycle in a year. Number of operating cycle in a year. And amount of working capital required. Amount of working capital required. எவ்வளவு working capital தேவைப்படுறது. Amount of working capital required. Okay. Jyotika, quickly read the question once again.
Opening balance, raw material 45,000, WIP 35,000, finished goods 60,000, 181, debtors 1,12,123, creditors 50,079, closing balance, raw material 65,356, WIP 51,300, finished goods 70,175, debtors 1,35,000, creditors 70,469. Annual purchase of raw materials at 90% credit is equal to 4 lakhs. Annual cost of production is 7,50,000. Annual cost of goods sold is 9,15,000. Annual operating cost is 9,50,000. Depreciation element is 20,000. Annual sales at 80% credit is 11 lakh. Requirement, net operating cycle period. Second one, number of operating cycles in a year. Third one, amount of working capital required.
Good. The first requirement is net operating cycle. What is the specialty in this question? If you see, operating cycle we have to express in what? Hemabendu, Lalita, Harish.
Days or months.
Yeah, we have to express in days or months. Yeah, operating cycle you have to express in days. But in this question, all the informations are available in rupees. That's logic or not? Available data in rupees, but requirement of the question in days. How to convert the rupees into days? That's the specialty in this question. Are you comfortable? Enan puriyudha?
Yes, sir.
So note panniko. Specialty in this question. Operating cycle we have to express in. Operating cycle we have to express in days or months. But available data are in rupees. Hence, we have to compute dash. யார் கரெக்டா சொல்றான்னு பாப்போம். We have to compute what? என்ன கொஸ்டின் கேட்குறேன் புரியுதா? ஆப்ரேட்டிங் சைக்கிள் டேஸ்ல இருக்கணும், பட் இன்ஃபர்மேஷன்ஸ் அவைலபிள் இன் வேல்யூ ருபீஸ்ல இருக்கு. ஸோ வி ஹவ் டு கம்ப்யூட் டேஷ். என்ன பண்ணணும்? నో ఐడియా. రెడ్డి గారు, అశ్విన్, హరీష్, జ్యోతిగా. So we have to compute turnover ratio. Turnover ratio. Because exam la clue கொடுக்க மாட்டான். First turnover ratio கண்டுபிடி, அப்புறம் சால்வ் பண்ணி கொடுக்க மாட்டான். They won't give any clue, am I right? So we need to compute turnover ratio. So when we have to compute turnover ratio, my dears? Yes, the holding period is called turnover ratio. When we have to compute turnover ratio, available data in rupees. Okay. Now, note it down. Statement of computation of turnover ratio. Statement of computation of turnover ratio and operating cycle. Statement of computation of turnover ratio and operating cycle. Okay. 5-column table. First column component. Second column formula. Third column calculation. Next column turnover ratio. And last column days. Shall I repeat once again? Component, formula, calculation, turnover ratio, days. Now, first raw material turnover ratio. Formula for raw material turnover ratio is raw material consumption divided by average stock of raw material. Raw material consumption divided by average stock of raw material. Raw material consumption is equal to opening stock of raw material plus purchase minus closing stock of raw material. So raw material consumption is equal to opening stock of raw material plus purchase minus closing stock of raw material. Raghuman, edudriya?
Yes, sir.
Denominator average raw material. What is average stock? Opening stock plus closing stock divided by 2 is equal to average. So in calculation column, numerator raw material consumption is equal to raw material opening stock of raw material 45,000 plus purchase of raw material 4 lakhs minus closing stock of raw material 65,356. Therefore, how much the consumption gonna? Raw material consumption gonna opening stock plus purchase minus closing stock
3,79,644, sir.
379,644. Good. Then average stock of raw material opening plus closing divided by 2 is equal to average. In order to opening stock plus closing stock divided by 2. எவ்வளவு கண்ணு?
178, sir. 55,178.
178. செக் பண்ணிக்கலாம் சரியா இருக்கான்ட்டு. Therefore, raw material turnover ratio. Answer for the raw material turnover ratio.
6.88.
Good. 6.88. Days is equal to 365 divided by raw material turnover ratio. 6.88 divided by raw material turnover ratio.
53 days.
53 days. Good. All of you got it?
Yes, sir.
Next, second component, WIP, formula for WIP. Cost of production divided by average stock of WIP. Cost of production divided by average stock of WIP. What is cost of production? It's given in this question, it seems. Cost of production 7,50,000 divided by average stock of WIP represent opening plus closing divided by 2. 35,000 plus 51,300 divided by 2 is equal to average stock. 35,000 plus 51,300. Therefore, WIP turnover ratio comes to
17.38.
very good. $17.38. So 365 divided by 17.38 is equal to number of days. Number of
21
days
days.
comes to 21 days. Listen here, the entire financial management year is equal to 360 only I have to take. But if any specific information is there, 1 year consists of 364 or 360, any specific information is there, then you can take that specific information 360. Else you have to take only 365 alone. Understood?
Yes, sir.
Raw material over, WIP over. Next, finished goods.
Finished.
Formula for finished goods. Cost of goods sold divided by average stock of finished goods. Cost of goods sold divided by average stock of finished goods. Cost of goods sold available 9,15,000 divided by average stock of finished goods represent opening stock plus closing stock divided by 2. Opening stock is equal to opening stock of finished goods 60,181. Closing stock of finished goods 70,175 divided by 2. So comes to
14.04.
turnover depot 14.04.
4.
Okay. Therefore, days comes to 26 days upper.
Yes, sir.
Raw material over, WIP over, finished goods over. Next, debtor.
Debtors.
Credit sales divided by average debtor. Credit sales divided by average debtor. If no information is there, we have to assume all the sales made under credit. If the specific information is there, I can make use. In this question, specific information is there. Am I right? 80% of the sales is the credit sales. So 11 lakh into 80% is equal to credit sales. 8,80,000 divided by average debtor. Opening plus closing divided by 2. Opening debtor 1,12,123. Closing debtor 1,35,000 divided by 2. Average debtor. Therefore, debtors turnover ratio comes to
7.12.
7.12. Therefore, 51 days agana.
Yes, sir.
51 days. Next, creditors turnover ratio formula. Credit purchase divided by average creditors. If no information is there, you have to take all the purchase made under credit. In this question, credit purchase specific information is there. 90% is a credit. No? So 4 lakhs into 90 percentage divided by average creditor. 50,079 plus 70,469 divided by 2 is equal to average creditor. So turnover ratio comes to
5.97.
5.97 and days comes to 61 days. Am I right?
Yes, sir.
So operating cycle is equal to how much? Operating cycle is equal to
90 days.
90 days. Huh? Raw material plus WAP plus finished goods plus debtor minus creditor. Jodiga, creditor subtract pannu. Got 90 days. What are the next requirement?
Number of cycles.
So answer for the first one over. Am I right? So next one. Number of cycles in a year is equal to 365 divided by operating cycle. So 365 divided by 90 is equal to how many cycles? 4 cycles.
4 cycles.
Or 4 point something or 4. You can take 4 also, rounding off 4 cycles. All of you got 4 cycles?
Yes, sir.
One more requirement is also there. Amount of working capital requirement. They don't statement of computation of amount of working capital requirement. Statement of computation of amount of working capital requirement. Underneath. Annual operating cost. Annual operating cost is equal to 9,50,000, which is given in this available in this question itself. Annual operating cost 9,50,000 less non-cash item depreciation. Less non-cash item depreciation 20,000. Balance is equal to annual cash operating cost. Annual cash operating cost 9,50,000 minus 20,000. 9,30,000. Okay. Required amount of working capital is equal to required amount of working capital is equal to annual cash operating cost divided by annual cash operating cost divided by number of operating cycle. number of operating cycle. That is 9,30,000 by 4 or 4 point something. This comes to
2,32,500.
2,32,500. Check பண்ணிக்கலாம். It's the required amount of working capital. Right. எல்லாருக்கும் சேம் ஆன்சர் வந்துதா?
So 2,29,630 வருது.
Denominator என்ன எடுத்துருக்கீங்க? 4 or 4 point something எடுத்துருக்கீங்கன்னா
4.05.
Okay. Accordingly change ஆகும்.
Okay.
You want the exact value, take the full 4 point something, the full எடுத்துக்கும், so that you get the exact value. Fraction இருந்தா தப்பு இல்லை. Got it, my dears?
Yes, sir.
Next. Operating cycle manageable இருக்கா? Shall we go to the
Yes,
next
sir.
one? Yes.
Yes, sir.
Yes, sir.
Next. Estimation of working capital requirement. Next caption, next segment. Estimation of working capital requirement. Estimation segregated into two parts. Estimation segregated into two parts. One is method 1, another one is method 2.
Yes, sir.
Method இருக்கு. Method 1 and method 2. Okay, Ashwin? Good, Arish. Method 1 and method 2. Under method 1, two types are there. Method 1 திரும்ப ரெண்டா பிரிச்சுக்கும். Estimation of working capital requirement. Estimation of working capital requirement segregated to two parts. Method 1 and method 2. Method 1 further segregated into two parts. By way of operating cycle, another one by way of estimation of each and every component of, by way of estimation of each and every component of current asset minus current liability. By way of estimation of each and every component of current asset and current liabilities.
So இது மெத்தட் 1ல தானா சார்?
மெத்தட் 1 ரெண்டு பார்ட் பிரிச்சிருக்கோம். அத செகண்ட் பார்ட் கண்ணு.
ஓகே சார்.
Then method 2, again that method 2 segregated into two parts. Total approach and cash cost approach. Total approach and cash cost approach. Okay. I'll repeat. Estimation of working capital, method 1 and method 2. Method 1, either by way of operating cycle or by way of estimation of each and every component of current asset and current liability. Method 2, total approach and cash cost approach. புரிஞ்சுதா கண்ணுங்களா?
Yes, sir.
Now we are moving to the next segment called estimation. எப்படி estimate பண்றது? The client want to start the business. How much the fund he need for the purpose of working capital? That estimation we are going to do now. Shall we try? Yeah. Ashwin, can you please read
Yes,
the
sir.
question? Chat box la question button konjam padinga.
Sir, find out the working capital requirement with the help of following information and add 10% for contingencies. Average amounts logged up in stocks. Finished goods rupees 8,000, raw materials rupees 12,000. Credit sales during the year, inland sales 8 weeks credit rupees 4,20,000. Export sales 3.5 weeks credit rupees 92,000. Other paid expenses rupees 10,000 paid half yearly in advance. Expenses incurred and their time lag, wages 2.5 weeks rupees 3,50,000. Stores, materials, etc. 1 month rupees 52,000. Rent, royalties, etc. 3 months rupees 16,000. Salary 0.5 months rupees 85,000. Miscellaneous expenses 2 months rupees 64,000.
That's it. So the requirement of the question, you have to compute working capital. Am I right? Shall we try? Start பண்ணலாமா?
Yes, sir.
Yeah, note பண்ணிக்கோ. எல்லாம் கம்ஃபர்டபுளா இருக்கீங்களா? புரியுதா கண்ணுங்களா? Good. பதிலே சொல்ல மாட்டேன்றேன். கட்டிக்கார. Statement of estimation of working capital. Statement of estimation of working capital. Okay. 3-column table, particulars, calculation and amount. Particulars, calculation and amount. Calculation column பெரிய column ஆட்டுக்கும். Under the particulars, what minus what is equal to working capital?
Current asset minus current.
Minus current.
So under the particulars, current asset, double underline. Under the current asset, first one, raw material. Calculation column. Raw material, calculation column. Ready-made information irunduna, you have to write given. You can write given. Given. Amount column, directly you can post 12,000. Raw material, given 12,000. In amount column, 12,000. Are you with me? Always remember, in calculation column, either working should be there or given should be there. If it is there in the question itself, you can write given. Okay? Okay, Shalmatiya.
Yes, sir.
Okay, sir.
Very good. Finished goods. So raw material, WIP, same order, raw material. Second one, WIP. Any info for WIP? Nil, nil. Because there is no info for WIP, therefore nil, nil. So raw material over, WIP over. Next, finished goods. Finished goods. Given amount. Given amount 8,000. Raw material over, WIP over, finished goods over. Next, debtor. Debtor. Under the debtor, A, inland sale. Inland sales. Under the debtor, A, inland sales. Calculation column, 4,20,000 into 8 by 52. Why 8 by 52? Total sales 4,20,000. Out of it, outstanding payment comes to how much? 8 weeks. So 1 year sale is equal to 4,20,000. 1 year nothing but 52 weeks. 8 weeks sales comes to debtor. So calculation column 4,20,000 into 8 by 52. Ashwin purida kanna?
Sir.
Reddy garu arthamainda?
Yes, sir.
So what is the amount kanna? 4,20,000 into 8 by 52.
64,615.
Good. Lalita able to manage? Export sales similarly, second one, export sales under the data. Export sales 92,000 into 3.5 divided by 52. 92,000 into 3.5 divided by 52. Good. So raw material over, WAP over, finished goods over, debtor over. Now we have to see any other current asset is there. Same order mathada. Raw material, WAP, finished goods, debtor. Okay. Any other current asset, cash or prepaid other prepaid expense irukku illaya? So
Sir.
Current asset la one of the current asset prepaid expenses 10,000 into 1 by 2. Why 1 by 2? Half yearly advance.
Half yearly paid advance.
Yeah. Half of the amount is a prepaid. 10,000 into 1 by 2. Comes to 5,000. So total current asset comes to how much? Total current asset comes to how much? Raw material plus WAP plus finished goods plus debtor.
807, sir.
Evalapa?
95,807.
95,807. எல்லாரும் செக் பண்ணீங்க?
Yes, sir.
Yes, sir.
Good. So current asset over. Now current liability, double underline. In component column, you can write current liability. Under the current liability, sundry creditors. In this question, sundry creditors irukka illaya? Available or not available? Unnada illaya Reddy garu? Ledu.
Not given.
Ledu. Not correct. If you see outstanding payment time lag, stores material etc. 1 month 52,000 is there. Irka? Stores material 1 month.
Sir.
Stores material represent what? Raw material. If I am going to buy the raw material, 1 month payment outstanding means that is it called what is that called? I am purchasing raw material 1 month arrear in payment. What is that called? Creditors. Instead of creditors, they are given time lag for stores and material given. Understood? Therefore, sundry creditors. So creditors also available in this question. Sundry creditors 52,000 into 1 by 12. Comes to 52,000 into 1 by 12.
4,333.
Next, outstanding wages, all other outstanding. Outstanding wages 3,50,000 into 2.5 weeks. 2.5 divided by 52. 3,50,000 into 2.5 divided by 52. Comes to
16,827.
16,827.
827.
16,827. Then outstanding rent and royalties. Outstanding rent and royalties. 16,000 into 3 by 12. 3 months, 3 by 12. Comes to
4,000, sir.
then 4,000. Outstanding salary 85,000 into 0.5 month, 0.5 divided by 12. 85,000 into 0.5 divided by 12. Comes to
3,542, sir.
good. And outstanding miscellaneous expenses 64,000 into 2 by 12.
10,667.
10,066. Okay. Therefore, total current liability comes to 100 creditors, outstanding wages, outstanding rent, royalty, what salary, and miscellaneous expenses.
39,369.
39,369 agana.
Yes, sir.
Good. Then working capital is equal to current asset minus current liability. Working capital is equal to current asset minus current liability. How much?
56,438, sir.
Next, required amount of working capital is equal. Sir, before that, add contingency. Am I right? Add contingency 10%. Add contingency 10%. Total is called required amount of working capital. How much the required amount of working capital?
62,081.8.
62,081. Right.
Yes, sir.
Good. Harish, Lalita, முடிச்சிங்களா? Ashwin, Reddy garu, Yamabindu.
Sir, answer என்ன sir? 62,084.
62,080.
81.8.
82.
Okay. Thank you, sir.
Good. வந்துச்சா. வந்தல்லு. Good, Yamabindu. மணிகண்டன் இருக்கீங்களா? மணிகண்டா. Good கண்ணா. சஷாங்க் முடிச்சிட்டே கண்ணா. Shall I go to the next one?
Yes, sir.
Good. Next question. Am I audible?
Yes, sir.
Some network issue. The next question. Format சரியா இல்லையாங்க? I'll read the question. The formatல கொஞ்சம் சரியா இல்லைன்னு நினைக்கிறேன், பார்த்துட்டு. Budgeted production quantity 9 lakhs. Raw material holding period 3 months. WAP holding period 1 month. Finished goods 1.5 months. Credit granted to customer 2.5 months. Credit availed 1.5 months. Minimum cash required 50,000. Credit granted to customer represent one.
Credit availed by debtors.
Nothing but debtor. Liam. Then credit availed represent one.
Creditors.
Creditors. Then other information, particulars and amount. Raw material per unit 12 rupees. Labor 5 rupees. Overheads 9 rupees, including depreciation of 1 rupee. Total cost 26 rupees. Profit 4 rupees. Selling price 30 rupees. They are required to compute working capital requirement under total approach and cash cost approach. Total and cash cost approach. புரியுதா? Next. For that, you have to go for first validation. Now we are going to solve the problem under total and cash cost approach. For that, we need validation rule we have to apply. Valuation rule under total approach and cash cost approach. Ashwin note paneko. Valuation rule under total and cash cost approach. Three column table, component, total approach, cash cost approach. Three column table, component, total approach, cash cost approach. In that component,
சார் அது மட்டும் கொஞ்சம் ரிப்பீட் பண்றீங்களா சார்?
valuation rule heading, three column table, component, total approach and cash cost approach. Rule for the total approach, rule for the cash cost approach. Okay va? புரியுதா? Under the component raw material, first we will complete total approach, thereafter you can go for cash cost approach. So first total approach போட்டுடலாம். Raw material under total approach, purchase price raw material. Valuation rule for total approach is purchase price. Next, WIP, raw material plus 50% of direct labor plus direct expenses plus production overhead. Raw material plus 50% of direct labor plus direct expenses plus production overhead. Then finished goods, cost of production. Debtors, selling price. Creditors, purchase price. Shall I repeat once again?
Yes, sir.
Component column first சொல்ற raw material, WIP, finished goods, debtor and creditor. Valuation rule and total approach. Raw material based on purchase price. WIP based on raw material plus direct labor plus direct expenses plus production overhead. 50% of direct labor plus direct expenses plus production overhead. I'll repeat for WIP. Raw material plus 50% of direct labor plus direct expenses plus production overhead. Finished goods based on cost of production. Debtors based on selling price. Creditors based on purchase price. Then cash cost approach. Cash cost approach. Raw material per all total approach, all are comfortable? Comfortable with respect to total approach rule?
Yes, sir.
Now we can go for cash cost approach. Raw material purchase price. WIP, raw material plus 50% of direct labor plus direct expenses plus production overhead minus depreciation. Direct labor plus direct expenses plus production overhead minus depreciation. Debtors based on selling price. Minus the profit minus depreciation. Debtors based on selling price minus profit minus depreciation. Creditors based on purchase price.
So finished goods, sir.
Finished goods, cost of production minus depreciation. Finished goods, cost of production minus depreciation. So I'll read out cash cost approach. Check paniko. Raw material purchase price. WIP, raw material plus 50% of direct labor plus direct expenses plus production overhead minus depreciation. Finished goods, cost of production minus depreciation. Debtors, selling price minus profit minus depreciation. Creditors, purchase price. All of you comfortable, my dears?
Yes, sir.
Good.
Sir, in work in progress, cash cost approach, we have to remove depreciation 50% or full?
50%. 50% of everything. Raw material, 50% of direct labor, direct expenses, production overhead, minus depreciation. Thereafter, close bracket.
Sir, when we have to take only cash components here, why depreciation is taken only 50%?
Yes, of course. Labor also 50%, overhead also 50%, depreciation also 50%.
I didn't understand the reason behind it.
Because it's WIP, it's not fully finished. Once after fully finished only, you'll get 100% depreciation. In between stage, that's why. We have to give the raw material, then only WAP going to start. Therefore, full raw material are given. Remaining work pending, we don't know how much percentage. Therefore, all other expenses remaining 50% only.
So this is just an assumption of 50%.
That's why it's called the estimation of working capital. You're estimating only. Understand?
Okay.
It's a rule for validation. With respect to rule, WAP information given in this question, for example, in this question, WAP, no need to go for the rule. Raw material, 3 months available. Labor, 1 month. Clear? The information is there in this question, mean we can take as it is. If nothing is given, we can't leave. Therefore, we have to go with the rule. So whenever specific information are there, this particular rule not applicable. If nothing is given, the rule we have to apply. Arthamaida?
Yes, sir.
Now, valuation rule in amount. Now we got the rule. We can fill with the amount. First, we can complete total approach. Raw material, how we have to value under total approach?
Purchase price.
Purchase price. Here, purchase price given 12 rupees. You can note it down. Under total approach, 12 rupees. Then, WIP, raw material 12 rupees plus labor 5 rupees plus overhead 9 rupees. 50% on 5 plus 9 comes to 12 plus 50% of 5 plus 9. 19 akana?
Yes, sir.
19
Yes.
rupees. WAP valuation 19 rupees. Finished goods based on cost, total cost of production 26 rupees. Debtors based on selling price 30 rupees. And creditors based on purchase price 12 rupees. Got it? Now we can move for cash cost approach. Raw material purchase price 12. WIP raw material plus 50% of direct labor and production overhead minus depreciation 12 plus 50% of 5 plus 9 minus 1. 5 plus 9 minus 1 into 50% plus 12 comes to 18.5. Am I right?
Yes, sir.
18.5. Finished goods, cost of production minus depreciation, 26 minus 1 comes to 25. Debtors, selling price minus profit minus depreciation. Selling price 30, profit 4, depreciation 1. Therefore,
25.
how come 25? 30 minus 4 minus 1 is equal to how much? How much?
25, sir.
4 minus 1 is equal to 3. 30 minus 3 is equal to 27 only, no?
We have to keep a bracket in between.
Andhra person are best in maths. So, 25. All elements over, Kanna? Valuation over. Jyotika,
Yes, sir.
valuation rule answer மட்டும் படிங்க raw material total approach cash cost approach WAP எல்லாம் படிங்க செக் பண்ணிங்களா
Raw material total approach Total approach: raw material 12, work in process 19, finished goods 26, debtors 30, creditors 12. Cash cost approach: raw material 12, work in progress 18.5, finished goods 25, debtors 25, creditors 12.
Good. Next. State.
Sir, what? Sir,
Yes.
sir, why taking for debtors? Why we are taking 30 instruments, sir?
Why we are
Because it is.
Sorry.
Sir, am I audible?
Yes. Why we are taking?
Taking 30 instead of 26 in case of debtors.
When? Which circumstance? Total approach or
Total
cash?
cost.
Total approach. Debtor
Total
based.
cost.
Total approach, you have to go by of selling price, no? Debtor based on what's the valuation rule?
That is, sir, that approach, no, sir. Sales price approach, total cost approach, and cost approach. There are only three methods, no, sir.
We are having total approach and a cash cost approach. What's
Okay.
the confusion? What's the confusion, Anna? In total approach 30, cash cost approach 25.
Okay, sir.
நீ என்ன புதுசா உனக்கு கிரியேட் பண்றது? வாடா பண்றாங்கண்ணா?
Yes, sir. Please.
Confused ஆயிட்டியா நீ? Okay. So up to this stage, are you comfortable?
Yes, sir.
Sir.
Okay. Next. Statement of estimation of working capital requirement. Statement of estimation of working capital requirement. Underneath first column component, second column calculation, third column quantity, next column total approach. The total approach la two classifications. One is rate, another one is amount. Next column cash cost approach, adula rate column one, amount column one. Total approach rate and amount, cash cost approach rate and amount. But totally sub column பார்த்தா 7 columns வரும். இருக்கடக்கன்னா main column 5, sub column total வந்து 7. Component, calculation, quantity, rate and amount for total approach, rate and amount for cash cost approach. అర్థమైందా? All of you. Next polamma. What minus what is equal to working capital? Current asset minus current liability. So under the component column, current asset, double underline. Under the current assets, raw material, how much the total production given? 9 lakhs agana. Check pannu. How much the total production
Yes,
quantity? 9 lakh. Calculation
9 lakh.
column you can note it down. 9 lakhs into how many months holding period?
3 months.
3 by 12. So raw material calculation column 9 lakhs into 3 by 12. So comes to agana
2,25,000.
2,25,000.
2,25,000. Total approach rate, how much we got it? Raw material 12 rupees. Am I right? So 12 into 2,25,000 is equal to amount. Total approach rate per unit we got it. Valuation rule 12 rupees. Therefore 12 into raw material 2,25,000 is equal to total value. How much total approach value?
27 lakhs.
Very good. 27 lakhs. Cash cost approach also same. Am I right? Same 12 rupees. So 27 lakhs. Right?
Yes,
sir.
சார் அந்த குவாண்டிட்டி காலம்ல இந்த 2,25,000 நம்ம பிளேஸ் பண்ணோம் சார்.
Quantity column. Calculation
Okay,
அந்த quantity எவ்வளவு units? Because 9 lakh is a units only. Other 3 months unit is equal to raw material quantity. Okay, Mohan
Okay,
Raj.
Right, sir. Okay.
Multiply with the rate is equal to value. Are you comfortable? சொல்றது புரியுதுன்னு நினைக்கிறேன் எல்லாருக்கும்.
Yes,
Yes,
sir.
sir.
Good, good. First of all, hats off to you. By way of dictating, you are able to capture the point. Good. Board எழுதாம sharing இல்லாம you are able to capture. No? That shows your level of concentration. I appreciate it. Good. Keep it up. Raw material over. Next one, WAP. Second component, WAP. இந்த அளவுக்கு அட்டென்ஷன் இருந்தால் தான் எக்ஸாம்ல பாஸ் பண்ண முடியும். குட். மோகன் ராஜ் கம்ஃபர்டபுளா இருக்கீங்களா? மணிகண்டன் கம்ஃபர்டபுளா இருக்காரா? WAP. Similarly, 9 lakhs into 1 month for WAP. 9 lakhs into 1 by 12. So how much quantity? 75,000.
75,000.
Quantity column 75,000. 75,000 into total approach rate for WAP 19. 75,000 into 19 is equal to total value. How much total value of WAP?
14 lakh.
14,25,000.
14,25,000. Whereas in cash cost approach, 18.5 into
18,500.
good konna 18.5 into 75,000 எவ்வளவுனா
13,87,500.
very good konna. So raw material over, WAP over. Next finished goods similarly 9 lakh into 1.5 months. 1.5 divided by 12 is equal to quantity.
1,12,500.
1,12,500. Total approach rate comes to 26. Multiply with the 26.
20,25,000, sir.
Cash approach rate comes to 25. Multiply with the 25.
28,12,500. sir.
Good. So raw material over, WAP over, finished goods over. Am I right? Then debtor 9 lakhs into 2.5 divided by 12. 9 lakhs into 2.5 divided by 12.
One lakh 87,500.
Very good. Multiply with the debtor value 30 edagana 30.
30, sir. 56,25,000, sir.
Whereas in cash cost approach 25 நினைக்கிறேன். Comes to
46,87,500.
number repeat
46,87,500.
which one, total approach or cash cost approach?
Cash cost, sir.
Cash cost of
Total approach எவ்வளவு இருந்தது?
56,25,000, sir.
Any other current asset is there? Because raw material over, WAP over, finished goods over, debtor over. Any other current asset is there?
Minimum cash.
Minimum cash. Cash amount column directly can write 50,000 for total approach and the cash cost approach also 50,000. Because ready-made information is there, calculation column you can write given. So cash given, amount called the data 50,000, 50,000. Total current asset is equal to, make it total medias. Total current asset is equal to under total approach, total current asset for the total approach,
One crore 27 lakhs 25,000, sir.
good. Under cash cost approach,
1 crore 16 lakhs 37,500.
very good. Then current liability, double underline, under the current liability, sundry creditors, calculation column 9 lakhs into 1.5 divided by 12. 9 lakhs into 1.5 divided by 12. Comes to
500.
multiply the sundry creditors based on purchase price 12 rupees, 12 rupees. Value comes to
13 lakh 50,000, sir.
both the column 13 lakh 50, 13 lakh 50. So working capital is equal to current asset minus current liabilities. How much the current asset minus current liability working capital?
One crore 13 lakhs 75,000, sir.
Very good. Whereas in cash cost approach,
Crore 2,87,500.
1 crore 2 lakhs 87,500. Now in the text point of the answer. Total approach and a cash cost approach. Shashank, புரியுதாங்கண்ணா? Got it. So answer kindly repeat once again, Jyotika. Total approach, required amount of working capital comes to. Good, Shashank.
Total working capital required and the total approach 1 crore 13 lakhs 75,000. Cash cost approach 1 crore 2 lakh 87,500.
Very good, very good. Got it, all of you. Manikanta Vandada, Hemabindu Vandada, Rahman Khan, Ashwin, Reddy Garu, Mohan Raj,
Sir.
Harish, Lalita.
Yes, sir.
Yes, sir.
எல்லாருக்கும் ஆன்சர் வந்ததா பார்த்துங்க. மேனேஜபிளா இருக்கா?
Yes, sir.
Any doubt in total and cash cost approach? வேற ஏதாவது டவுட் இருக்கா கண்ணா?
No doubt, sir. All clear.
Very good. Suppose in examination, which approach is not given? Approach is not mentioned in this question, either total approach or cash cost approach. Then how to solve the problem? Which approach you will choose? Question well கொடுத்திருக்கோம். Required we have to compute working capital, but they have not mentioned whether this problem is based on total or cash cost approach. Then which approach you will do?
Look on.
Total approach.
Total approach. Jyotika garu?
Both, sir.
Sir, if depreciation is given, then cash cost approach.
Very good, very good. அப்ப என்ன பண்ணணும்னா, what is the difference between total approach and cash cost approach, Shashank? What is the main difference between total approach and the cash cost approach? Lalita,
Depreciation.
two elements, depreciation and profit. Maritarna. Profit and depreciation is omitted from cash cost approach. Therefore, if depreciation element and condition and profit elements are given, rendu irundhudunal, if both are identifiable or available, then better to solve the problem by way of cash cost approach. Not must, better to solve the problem by way of cash cost approach. If it is not identifiable or something is missing, any one of the thing missing, then better to go by way of total approach. Purida? Are you with me? Suppose
Yes, sir.
depreciation element is not given in this question. Profit element is there. Which approach you have to choose?
Total approach.
Total cost approach.
Good. Total approach, not total cost. Total approach. Then, second one. Suppose profit element is missing, depreciation only given in this question. Then,
Total approach. Okay.
if profit and depreciation elements are given in this question, then
Cash cost.
better to go by way of cash cost approach. Logic purjada? So depending upon the availability of the information, we have to choose the method. Suppose in exam confusion or give you one note. I have solved the problem by way of total approach. Notes you will get the full mark. Okay, ready, Garu? Accordingly, you'll get the full mark.
Yes, sir.
Okay, good. Shall I have the break now?
Yes, sir.
After the break, we can meet. Shall I go to next segment? Yes. Audible, no? Shall I go to next segment? Next. Note பண்ணிக்கோ. Cash management. Cash management.
So next heading is it?
Next heading. Yes. Under the cash management. Optimum cash balance.
So cash management heading
Heading cash management. Side heading optimum cash optimum cash balance. Optimum cash balance. It represents minimum amount of cash. It represents minimum amount of cash required at minimum amount of cash required at any given point of time. Minimum amount of cash required for any given point of time. Next. Cash management model, அது ரெண்டா பிரிச்சுக்கோ. Segregated to two parts. Cash management model segregated into two parts. One is J. Baumol's model. J. Baumol's, name of the person, Baumol's model. Another one is Miller or cash management model. Miller or ORR. Miller or cash management model. Name of the person. J. Baumol's model and Miller or cash management model. Under Baumol's model, formula for optimum cash balance. Under Baumol's model, it's based on the assumption of uniform cash flow. Based on the assumption of uniform cash flow. Miller or cash management model, based on the assumption of uneven cash flow.
Excuse me, sir, can you please repeat?
J. Baumol's model, it's based on the assumption of uniform cash flow. Miller or cash management model, it's based on the assumption of uneven cash flow. Uneven cash flow. Next, formula for J. Baumol's model. formula for the Baumol's model. Square root optimum cash balance is equal to square root of 2AT divided by I. 2AT divided by I. Underneath A for annual cash disbursement. Annual cash disbursement. T represent transaction cost per transfer. Transaction cost per transfer. I represent interest. I represent interest. Shall I repeat once again? Square root of 2AT divided by I. A represent annual cash disbursement. T represent transaction cost per transfer. Then I represent interest component. Noted, my dears?
Yes, sir.
Good. Now, kindly go through the question. Hemabundu, kindly read.
Yes, sir. The firm maintains a separate account for cash disbursement. Total disbursements are 1,05,000 rupees per month or 12,60,000 rupees per year. Administrative and transaction cost of transferring cash to disbursement account is 20 rupees per transfer. Transferable marketable securities yield 8% per annum. Determine the optimum cash balance according to J. Baumol model. Average cash balance, number of transfers per year, time interval between two transfers, total transaction cost, total carrying cost, and total associated cost.
Good. What are the first requirement? Good response.
Optimum cash balance.
Optimum cash balance is equal to, what is the formula? Square root of 2AT divided by I. Okay. Next. A is equal to annual cash disbursement. How much annual cash irukana? So square root of 2 into 12,60,000 into transaction cost per transfer 20 rupees. 20 rupees divided by interest component 8% nothing but 0.08 போனுடாங்க. 0.08. ஆன்சர் வருது பாருங்க.
25,100, sir.
Very good. All of you got 25,100.
Yes, sir.
Good. What are the next requirement, my dears?
Average cash balance.
Average cash balance is equal to half of the optimum cash balance. 1/2 of optimum cash balance. So 25,100 into 1/2.
12,550, sir.
Good. Next. ₹12,000, 12,550. Rupee symbol போலனா half mark reduce பண்ணுவாங்க. Ashwin half mark வேணும் வேண்டாமா? What is the next one?
Number of transfers per year.
Number of transfers in a year is equal to 365 divided by, so no, number of transfers in a year is equal to annual cash divided by annual cash requirement divided by, or annual cash disbursement divided by optimum cash balance. 12,60,000 of divided by 25,100. Annual cash disbursement divided by optimum cash balance.
$50.2.
50 point something or 50 transfers. Got it?
Yes, sir.
Next. What are the next requirement?
Time interval between two transfers.
Time interval between two transfers is equal to 365 divided by number of transfer. $365 divided by number of transfer.
7.3 days, sir.
Days. Very good, Panna. 7.3 days. Days is half mark. 7.3 days. Got it? What next?
Total transaction cost.
Total transaction cost is equal to number of transfers divided by number of transfers into cost per transfer. Number of transfers 50. Cost per transfer given in this question 20. So 50 into 20, or you can take the fraction also.
1,004, sir.
1000 or 1004. Yes. What next?
Total carrying cost.
Carrying cost.
Total carrying cost is equal to half of the optimum cash balance into interest percentage. Half of the optimum 12,550 into 8%. This comes to
1,004.
1004 again. What is the last requirement?
Total associated cost.
Associated cost is equal to transaction cost plus carrying cost. 1004 plus 1004, 2008 rupees 2008. Got it?
Yes, sir.
So this is similar to that material costing.
EOQ, yes, EOQ concept. EOQ formula has been created by Wilson's formula. J. Baumol's formula, cash management model, we used to criticize the copy paste from Wilson's approach. Okay, ma? It's similar to economic auditing, economic order quantity, similar formula, adopted formula. Understood, Ashwin?
Yes, sir.
Next. Jyotika, kindly read out the answer to verify.
Also,
Kindly read out the answer. 7 requirement answer.
optimum cash balance according to J. Baumol's model, rupees 25,100. Average cash balance is equal to rupees 12,550. Number of transfers per year is equal to 50 transfers. Time interval between two transfers is equal to 7.3 days. Total transaction cost is equal to 1,000 rupees. Total carrying cost is equal to 1,004. Seventh one, total associated cost is equal to 2,008.
Right. எல்லாருக்கும் வந்துதா? Shall I go to the next problem?
Yes, sir.
மணிகண்டா அடுத்த கொஸ்டின் பண்றாங்க. மணி இருக்கானா? சுப்பிரமணி, ரஹ்மான் கான் படிங்க.
Yes, sir. A company currently has an annual turnover of rupees 10 lakhs and an average collection period of 45 days. The company wants to experiment with a more liberal credit policy on the ground that increase in collection period will generate additional sales. From the following information, kindly indicate which of the policies you would like the company to adopt. Credit increase in policy, credit increase in percentage of collection period. Default.
Alignment policy, credit policy 1, increase in collection period 15 days, increase in sales 50,000, percentage of default 2%. With respect to credit policy 2, increase in collection period 30 days, increase in sales 80,000, increase in percentage of default comes to 3%. Credit policy 3, increase in collection period 40 days, increase in sales 1 lakh, in percentage of default comes to 4%. Credit policy 4, increase in collection period 60 days, increase in sales in rupees 1,25,000, percentage of default comes to 6%.
The selling price of the product is rupees 5, average cost per unit at current level is rupees 4, and the variable cost per unit is rupees 3. The current bad debt loss is 1%, and the required rate of return on investment is 20%. A year can be taken to comprise of 360 days.
So this question is based on credit granting decision. What is called credit granting decision? Whether we have to grant the credit or not. Kadanukku vyabaram panalama vendama. That is what the policy are going to take. Further, we have to do cost benefit analysis. Benefit, edukka kadanukku vyabaram pandrom? Why we are doing credit sales kanna? What is the reason for the credit sales?
To attract customers to take.
So more customer will come, more sales will happen. Am I right? Ultimately, more profit we can get. But at the same time, if you go for the credit, what are the cost to the company? Enna selavaga chance irukku?
Risk of bad debts.
Bad debts may happen. Okay, எல்லாரும் பணம் கொடுப்பான்னு சொல்ல முடியாது. Bad debts. Be mentally prepared to accept the bad debts. And another one, opportunity cost. Yes, Kanna. Yes, Kanna. Opportunity cost. If you are not going to pay money now, 1 month later கொடுக்குற, that 1 month opportunity cost we have to bear it. Am I right or not? Are you with me? So we have to do cost benefit analysis. Out of 4 policy, which policy preferable we have to identify. Shall we try பண்ணலாமா?
Yes, sir.
We have to do cost benefit analysis only. Note பண்ணுங்க. Statement of evaluation of credit policy. Statement of evaluation of credit policy. Six-column table. Particulars, current situation, policy 1, policy 2, policy 3, and policy 4. 4 policies are there. Am I right? Under the particulars, Mohan Raj Puridagana.
Yes, sir.
Under the particulars, credit period. Under the particulars, credit period. Current situation, how much the credit period kanna?
45 days.
45 days. Policy 1, how much increase in credit period?
15 days.
Additional 15 days. Increase are there. 45 plus 15 is equal to 60 days in
60
policy
days.
1. Similarly, policy 2, 45 plus increase are there.
30 days.
30 days.
அப்ப எவ்வளவு? 75 days. Am I right? Then third one, 45 plus
30 days.
85 agana.
Yes, sir.
And last one,
105 days.
105 days. Good like that. So credit period 45 days, 60 days, 75 days, 85 days and 105 days. அப்ப என்ன கொஸ்டின்? 40 நாள் கிரெடிட் கொடுக்கலாமா அல்ல 60 நாளா மாத்தலாமா, இல்ல 75 நாள் மாத்தலாமா, இல்ல 85 நாள் மாத்தலாமா, இல்ல 105 நாள் மாத்தலாமா? That is what the requirement of the question. Right? புரியுது என்னன்ட்டு?
Yes, sir.
Where we are going to get more benefit, that option is preferable. Next. Under the particulars column, next one. Sales revenue given. Am I right? Current situation, how much the sales revenue? Currently
10 lakhs.
10 lakhs. In policy 1, increase the extent of 50,000. Up 10 lakh plus 50,000 is equal to 10 lakh 50,000. Policy 2, 10 lakh 80,000. Policy 3, 11 lakhs. And policy 4, 11 lakh 25,000. Right, Adaganna? Next. Then less variable cost. How much the variable cost? எவ்வளவு வேரியபிள் காஸ்ட்
3
இருக்கு?
rupees per unit.
என்னப்பா?
3 rupees per unit.
3 rupees per unit. Selling price எவ்வளவு இருக்கு?
5 rupees.
5. Out of 5, 3 rupees variable cost. Therefore, how much the percentage of variable cost on sales?
60%.
60%.
60%. Therefore, variable cost at the rate of 60%. Mohan Raj, புரியுதா அப்படி 60%? லலிதா புரியுதா 60% ஏன்ட்டு?
Yes, sir.
So 60% on sales is equal to variable cost. Sales into 60%. 10 lakh into 60% is equal to 6 lakhs. Good for now. Then 10 lakh 50,000 to 60%.
6 lakh 30,000.
6 lakh 30. Next column 10 lakh 80,000 into 60%.
6 lakh 48,000.
Lakh 48,000.
11 lakh into 60%.
6 lakh 60,000.
60,000.
And 11 lakh 25,000 into 60%.
6 lakh 75,000.
Good. 6 lakh 75,000. Balance is equal to contribution. Good, Lalita. Balance is equal to contribution. Current situation 10 lakhs minus 6 lakh. 4 lakh is the contribution for the current situation. Policy 1,
4 lakh 20,000. 4 lakh 32,000.
432. Policy 3,
4 lakh 40,000.
very good, 4 lakh 40. And the last one,
4 lakh 50,000.
4 lakh 50 edakana
50,000.
50,000. So 4 lakh 20, 4 lakh 32,000, 4 lakh 40,000 and 4 lakh 50,000. This is a contribution. That contribution is a benefit for you. And the benefit note panikkum. We have to do cost benefit analysis. For that benefit is over. Now shall we go for cost?
Yes, sir.
ரெண்டு காஸ்ட் டிஸ்கஸ் பண்ணோம். There are two costs. என்னென்ன பார்த்தோம்? One is bad debts, another one is opportunity cost. First one, bad debts. That is given in this question, percentage. Bad debts percentage you have to apply always on sale value. Current situation, how much the percentage of bad debts?
1%.
1%. 10 lakh into 1% is equal to bad debts for the current situation, 10,000. Then policy 1, 2% on 10 lakh 50,000. Am I right? So 10 lakh 50 into 2% is equal to
21,000.
31,000. Policy 3,
21, sir.
21,000. Okay. Policy 3, 10 lakh 80,000 into 3%.
32,400.
Good. Then 11 lakh into 4%.
44,000.
Good. And 11,25,000 into 6%.
67,500.
67,500. Good. 10,000, 21,000, 32,400, 44,000, 67,500. Very good, Talita. All of you got bad debts. It's a first cost. Cost number 1 over. Any doubt in cost 1? All of you got cost 1.
Yes, sir.
Then we can go for cost 2. What is cost 2?
Opportunity cost.
Opportunity cost. Opportunity cost arises because of the debtor. So first you have to compute debtor. If you paid the money, panam kudutitena, there is no question of opportunity cost. If you are not going to pay the money, then only opportunity cost arises. Not paid the money is called what? Debtor. So first you have to compute debtor. In debtor only opportunity cost is there. So first debtor. What about the debtor? Current situation, 45 days is a credit period. Total turnover 10 lakhs. 1 year consists of 360 days. Am I right? Up 360 days sales is equal to 10 lakhs mean 45 days sales is equal to debtor. So 10 lakhs divided by 360 into 45 is equal to debtor. Logic புரியுதா? ஒரு வருஷ sales 10 lakhs. 45 நாள் credit period. Therefore, how much the debtor?
2,25,000.
Harish இருக்கி எவ்வளோப்பா? 2 lakh? So how much debtor for the first one? Current situation?
1,23,288, sir.
அப்படியா? 10 lakh divided by 360 into 45 is equal to 1,25,000. Ma'am. For the right answer, 125 is correct or not? Mohan, சொல்லலாம் answer.
So 1 lakh.
Policy 1, similarly, 10,50,000 into 60 divided by 360. Am I right?
One lakh 75,000.
Good. 1,75,000. Similarly, 10,80,000 is for 360 days sales, whereas 75 days sales comes to how much proportionately?
2,25,000.
2,25,000. Next, 11 lakhs is for 360 days, whereas 85 days sales comes to how much? Not sure.
2,59,722.
259,722. And last, 11,25,000 is for 360 days sales, whereas 105 days sales comes to how much?
3,28,125.
Very good. Very good. All of you got debtor? Reddy Garu, kindly read debtor alone one more time. Current situation in the
1,25,000.
for all policy 1, 2, 3.
Policy 1, 1,75,000. Policy 2, 2,25,000. Policy 3, 2,59,722. Policy 4, 3,28,125.
Very good. Very good. Very good. Next, we got debtor. Debtor in sale. Debtor is on sale value or cost?
Sale value.
Always sale value. But opportunity cost lies in the cost. Opportunity cost. Okay. Opportunity cost lies in the cost. Therefore, cost of debtor. Next column. Cost of debtor is equal to. Cost of debtor is equal to 60% of debtor. Why 60%? Selling price 5 equal to 3 rupees. 60% on sales is equal to cost. 60% on debtor is equal to cost of debtor. So 60% on debtor comes to how much for the first one?
75,000, sir.
75,000. Next. 60% on the previous line item. Debtor.
1,05,000, sir.
105,000. Next.
Lakh
1,35,000.
1,35,000. Next.
Lakh
1,55,833.
1 lakh.
55,833.
Last column also over.
1,96,875, sir.
1,96,875. You got cost of the debtor. All of you, Jyotika, read one more time. Cost of the debtor from current situation to policy 4.
Cost of debt.
Yes, Jyotika, read.
Cost of debtors, current policy 75,000, policy 1, 1,05,000, policy 2, 1,35,000, policy 3, 1,55,833, policy 4, 1,96,875.
So doubt, sir.
Solidama. Yes.
So the debtors on the 45% divided by 364 only. Yeah. The 45%
percentage is 45 days.
45 days. Oh, the first kandupidichada. Right. Okay, sir.
Next line item.
Sir, I have a doubt, sir.
Yes, already got it. Why not taken the fixed cost? Why only variable cost? Am I right? Why 1 rupee not taken?
Yes, sir.
I know. That's what the question you'll ask. Fixed costs remain constant irrespective of the policy. Company is in going concern. Am I right? Currently, 45 days credit period is there. Am I right? If I am going to increase the credit period, sales will only going to get increased. Sales increase means production is going to get increased. Production increases means variable cost only going to get, fixed cost remain constant irrespective of the production quantity. Arthamainda?
Yes, sir.
That's the reason. The next line item. Opportunity cost at the rate of what percentage? Given in this question. 20%. Am I right? 20% on previous line item. Cost of the debtor into 20%. 20% on cost of the debtor comes to
15,000, sir.
15,000. Next.
51,000.
27,000.
27,000.
31,167. About 39,375.
Very good. Read one more time all the cost of all the opportunity cost on contracts. Check on others.
Opportunity cost at 20% on cost of debtors.
Current situation.
For the current situation, 15,000. Policy 1, 21,000. Policy 2, 27,000. Policy 3, 31,167. Policy 4, 39,375.
Good. That's the cost to the company. First cost bad debts, second cost opportunity cost. That you can mark it as a cost to. Baba. Then net benefit is equal to benefit minus cost 1 and cost 2.
So net benefit,
next line item, net benefit is equal to benefit minus cost 1 and cost 2. Benefit is the contribution minus cost 1 bad debts minus cost 2 opportunity cost, balance equal to net benefit. What about the net benefit?
3,75,000, sir.
First column 3,75,000. Second column 3,78,000. Check paniko.
375 வருது.
375. Next 378.
378.
3,72,600, sir. Policy 2.
Okay.
$3,72,600, sir. Policy 2.
Okay.
Policy 2. Sir.
Next to
3,64,833.
Policy 4, 3,43,125, sir.
Good. So read one more time all the net benefit, Jyotika.
Net benefits is equal to benefits minus bad debts minus opportunity cost. Current policy 3,75,000. Policy 1, 3,78,000. Policy 2, 3,72,600. Policy 3, 3,64,833. Policy 4, 3,43,125.
Good. Therefore, where we are getting more benefit?
Policy 1, sir.
Policy 1 now. 3,78,000. Yeah. Therefore,
Yes,
conclusion. How many days credit policy is preferable?
60 days.
For 60 days credit policy is preferable. Write the conclusion. 60 days credit policy is preferable. Lalita, enjoy panniya. Harish, all are happy. Manageable. Purijada. Hope you got it? Yeah. My best wishes for your success. All the best for your exam. Okay.